donation of highly appreciated stock. And this one here, we don't know for sure, but I'm going to see what the panel thinks about this one.
No one wants to touch that mic.
Come on now. I think I'm going to lean on somebody in particular because he's the one who brought it up when we were talking about it earlier. $100,000 value was contributed to a 501c3 after AGI limitations. $897,500 is carried over. Contribution 2025. Carried over 26. Remember, folks, we have 5 years to use it up. We have a $500,000 AGI coming in going forward. We figure we'll use up most of it at that point by the 5-year period. If not, so be it. There will be no other contribution in 26. Is the carryover now subject to the OBBBA 0.5% haircut for each year going forward? 0.5. I did say 0.5.
Oh, I heard 25. I'm sorry.
I did say 0.5, correct? I keep on getting that confused. I don't know why.
No. Sorry, couldn't resist. So
Well, I don't
it's
know.
a great question, and we're going to preface that with you. You didn't mention it, but we'll assume that it was like publicly traded stock, very perfectly papered for
It was all clean.
acknowledgement. So no problem with the contribution itself. The real question is just the mechanics of what happens in 26 and how do we plan for that. And we were just talking about this. There's that draft format, which I missed, which tends to indicate that we're not going to lose that 0.5% next year, or reasonably any year after that. So the carry forward doesn't have to flow through that math calculation. And I put
Hold on,
that.
before you go any further, I want, since Tom did actually see the form, let us know what form we're talking about.
So the
And where it
IRS,
works.
I don't know if you know, the IRS releases draft forms, right? And they're actually a wealth of information for what the IRS is planning or how they interpret things. They released the draft Schedule A for 26, which, by the way, is now 2 pages. So make sure you double your prices for it. And on the charity section, it says cash contributions, non-cash, amount deductible per the limitation worksheet. Then it says carryover from prior year, add limitation worksheet and carryover, and that's your deduction, which seems to indicate that the carryover doesn't fall into that 0.5% floor. Now, when I read the law, that's not how I interpreted it, but I'll be fair, the actual provision doesn't really address carryovers. My interpretation was a carryover is treated as a contribution in the next year. Well, then that should be subject to the floor. Now, the IRS, of course, if they take a taxpayer-friendly position, even if it's contrary to the law, who has the right to challenge it? The IRS isn't going to challenge it. The taxpayer isn't. So maybe they're liberally construing it. I don't know. It's a draft. It could also flip in the next version. And I've seen that happen.
And I'm kind of wondering, just thinking while you're talking, any carryover into 2026 was pre-haircut law. It came from 25 or before. So maybe the 26 version of the form, the carryover isn't subject to the haircut, but then in 26, maybe it will say pre-26 carry forward, and then put in the other part of it a post-25 carry forward.
I guess I need to look at OB3 and see what was the provision effective. What was the effective provision? Was for amounts? Was it for tax years after? Was it for payments made after a date? I don't know what that is for that specific rule.
I think what you're saying puts it in the same realm as our QBI carryovers, or not QBI, for our net operating loss carryovers. If I have an NOL from pre-TCJA, I can deduct it against 100% of my taxable income. But after TCJA, I only get 80% of taxable income. And so I have to keep track of my NOLs separately for pre and post. And that really follows this. It makes good logical sense. But like Tom, I think I kind of want to sit down and actually play with the law itself, read the updated code sections, and check those effective dates.
Because the blue book that the Joint Committee on Taxation wrote up did not address this issue in the way it might have been helpful. So
I was just going to say, in terms of the overall picture on a long-term basis, Mark brings up a great point with the pre-TCJA NOLs. I will point out that the one difference there is that the time frame for the expiration of those NOLs is a lot greater than the expiration of charitable donations at 5 years.
And I would think also that was specifically stated because of the time frame, we ought to use those first, correct? In order.
And the one other thing I want to add to that, all four of us are USTCP, and all four of us have learned and read cases where the IRS is wrong. The IRS can even write forms wrong. Tom, back when the unemployment issue with 2020 and COVID, famously was saying, no, the community property splitting, blah, blah, blah. And then the IRS came out and said, well, yes, you can, which for those of us who normally never do married filing separate and community property states did. But Tom was still right. The IRS was wrong. My very first court case actually was a question on that issue. And I did it as what's called a small case, where it's just kind of an easy peasy little thing because it should have been. The tax court, not the IRS, the tax court came back and said, no, we don't want this in easy court. We want this in big court. They wanted to address the issue. The IRS said, came back to me and said, okay, we're just accepting the return as filed. They didn't want to go into big boy court. So the IRS, just huge point, the IRS form can be wrong because the people at the IRS, even the lawyers,
Especially the lawyers.
can make mistakes.
Well, Chief Counsel decided, real quick here, and we're going to wrap this up pretty good, but Chief Counsel decided that the $100,000 of anything but acquisition debt, when we had the million plus 100,000, was suddenly acquisition debt. And I remember when I heard that, my buddy on the dark side came out in big bold letters with an email to me, Chief Counsel cannot rewrite the law. And my response to him in small letters was, I liked the way he did it.